Hello everybody. So today a quick video on running, and I am actually buying this dip. I'm very happy that the stock is dropping 14% right now, because much of this drop is really due to currency movements and revenue not meeting expectations because of a strong US dollar, and not really due, in my view, to anything wrong with the business. And of course, the stock dropped because the algos in Wall Street only cares about the next day, the next few days, perhaps sometimes the next quarter, but really they don't look long term. The market doesn't look long term. I believe this company is a great company for the long term. In fact, if you look at their highlights, 46% DTC sales, and they have guided for close to 60% direct to consumer sales by the end of 2024. If you look at their projection numbers, so this is a company that is slowly moving into a almost fully direct to consumer model. They are slowly dropping their old distributors. They are focused on quality growth. Also worth mentioning that over next year they expect more than 60% of the gross margin coming up. And you know that I care about the long term. They've reiterated a guidance that I consider to be sandbagged of at least 30% growth for the fiscal year 2024, the year that we just started, but they didn't report on, right? They reported for Q4 2023. They've guided for more than 18% of EBITDA margin. And I think, of course, that guidance is sandbagged because they have the Paris Olympics coming up, which should be a great booster of sales, especially in big cities, especially as they open up large, prominent stores in major cities. They are in the process of opening one in Paris, actually, not just London. London is actually their fifth largest country as far as the size of the store. This is a store that is very popular among many segments of society. You know, people in their 30s, their 40s, kind of older hipsters is the way I would describe this brand. Who is this brand for kind of the older hipster? They have a lot of good things going for them. They're also popular in the healthcare segment. A lot of people don't wear the shoes to run; they wear the shoes in the healthcare space. And again, the stock dropping 14% is a gift. Now, my spreadsheet really favors the stock. So now with the drop and with the addition in cash, their cash pile actually grew 30% quarter over quarter. So if you include both the cash and the drop, that's market cap plus net cash, by the way, plus net cash is what I'm supposed to show here. So that's a 9.8 billion enterprise value. The enterprise value number is correct here. So the EV is 9.8 billion right now. The revenue is close to 2 billion at 1.926 million trailing 12-month revenue, and the revenue growth is 45% is what I'm predicting. I'm predicting they'll do more than 30%, but I'm not as optimistic as the analysts. The analysts are still showing 51% revenue growth for the next 12 months. Let's just say I'm using 35%. So using 35%, you get a stock on enterprise value over gross profit over revenue growth of a 0.24. So this stock is in the top 25% cheapest stock in my coverage universe. Using EBITDA margin that we get it at 18%, you get a rule of 40 or 53, so well above a rule of 40. And assuming taking the analyst number of 51% revenue growth for the next 12 months, then you get at a 0.16, which is becoming dirt cheap. EBITDA margin is 14%, and the revenue growth, the revenue growth plus EBITDA, i.e. the rule of 40, would be a 69%. I want to say about On Running is that for me, this is a very, very long-term play. This is not a short-term play whatsoever. And this is just a sample from the last time I covered the channel. But the stock went, well, it's now for close to 2 billion, from 0 to 2 billion in 14 years, just about, almost 15 years. So they went from 0 to 2 billion in 15 years. That's absolutely outstanding. They are taking shares from brands like Nike, like Adidas, and their main competitor is really only Oka if I look at the space. They're in a brutal space, but the total addressable market is very much a huge one, and they are part of this narrative of legacy brand being entrenched within their distribution network and not being able to undercut themselves, not being able to cut their own distributors out of the picture and go direct to consumer. To me, direct to consumer is the way to go for so many brands, not just clothes now. And by the way, they are moving into clothes and selling clothes. Again, very popular strategy in the way they sell the product, and there's a few more things, and I'll conclude with this. There's a few more things that I love about the stock. So again, they've given us long-term guidance, as you know on this channel. I love long-term guidance. They've kept it. They've reiterated again by getting right now at 30%. So over the next 3 years, we're going to grow more than 100% from what they are saying. That's 30% a year. And so the question is, can they grow 30% a year for say 5 years or 7 years or 10 years? What if they can do that? Well, then in my view, this will be a great performance, great total return type stock. The Paris Olympics is bringing a lot of excitement to the brand and in the running community and in the running shoe community. And of course, they have acquired more athletes. They're equipping more athletes with the On brand, and that should really resonate with the quote-unquote hipster crowd. And lastly, the governance structure of this company is very interesting in the sense that we have a company that is not going to be prone to takeovers due to the governance structure. Very strong ownership of the founder, CEO, very involved CEO, really there to build a company for the next decades and not a company for this decade. And the long-term feeling of this company On Running is really manifesting itself in this company. I've listened to a little bit of the call. I like it very much. I added a little bit this morning, despite some stock like Tesla still being down, and Tesla is my number one position. But I made an exception this morning, and I added a little bit of On Running, and I'm happy to see the numbers this good. And this drop, I consider a gift. This 14% drop, I consider a gift. So this was not investment advice. This is just entertainment. I hope you were entertained. Please like, please subscribe. Thanks for watching, and have a wonderful day.